All right, friends, welcome to class. It's a pleasure to be around us today. Uh, Today we are going to be looking at introduction to financial accounting. Introduction to financial accounting. Okay, this is an introductory part, and I am very sure you will gain a lot in this class. All right, so let's continue the All right. About me, James Ayodeji. You can go on and. All right. Definition. Definition is accounting is a systematic and comprehensive recording of financial transactions pertaining to a business and the process of summarizing, analyzing, and reporting these transactions. Now, it is a systematic and comprehensive recording of financial transactions. Now, anything that has to do with financial transactions in your company, it is accounting that you will use to record it, or rather start by saying the process of summarizing it, analyzing it, and reporting it. You understand it? Now, it says a systematic process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting. You see, these are long description of what accounting is. You understand? It measures, it communicates economic information to permit informed judgment and decisions by users of the information. Is very, very important. All right, we'll move to types of accounting. Types of accounting. We are moving to types of accounting. Accounting answers to different needs and questions sequel to its systemic way of preparing it. In view of the fact that there are several users of accounting information with different needs. Now, you see this accounting information, different persons use them, different persons need them. So, this is accounting information is more or less like the monitor on your system. It shows the health, it shows whatever is inside, tells you the reflection of what is inside the system. It gives you feedback. So accounting information gives feedback to several users, and it helps these users to take certain decisions on the feedback they got from the financial information. I hope you're following. All right, so that is the importance of different types of accounting. So we'll be moving forward. These are the list of the types of accounting that we have. We have financial accounting, cost accounting, performance management accounting. We have auditing. We have government accounting. We have taxation. We have financial management. We have forensic accounting. We have social and environmental accounting. And lastly, we have bookkeeping. All right, we'll be looking at each one of these in detail. We are going to be looking at each one in detail. We'll start with financial accounting. This involves the process of recording, classifying, preparation, interpretation of financial statement. Now, when you hear financial accounting, it has more to do with financial statement. Financial accounting has more to do with financial statement, so that both internal and external users can make informed decisions. Now, financial accounting has more to do with financial statement, preparation, recording, classifying, interpretation of financial statement. Now, each one of these has its own description. Each one of these classification of financial statement, interpretation is very key of financial statement. ETC preparation also was reflected through IAS 1, that's International Accounting Standards 1, that's preparation of financial statement. So each one of these they are more of each of their components. Like each of their components has a load a load of information. It has a load of, each of these components you are seeing here has a load of information. How you are going to prepare it, it has rules and regulations, which we call accounting standards. That's we have different types of accounting standards, but preparing it has its own accounting standard, which is International Accounting Standard 1, like I said earlier. All right, so that is financial accounting. Like I said, let's reiterate it. It has to do more of financial statements. All right, next to it is cost accounting. As the name implies, cost accounting is the procedure for accumulating cost data to provide information for planning, control, and decision making by management. Now, cost accounting is more of management accounting. It is management it is the management that uses cost accounting most. It is the management that uses cost accounting most, and it is the accumulation of costs. Please try and bear it in mind. All right, the next thing we're going to be looking at is performance management. Performance management is a continuous process where managers and employees combine efforts in planning, monitoring, and reviewing the effectiveness of the workforce towards the achievement of the overall objective of the entity. Now, performance, from the name, you will know that performance management is a type of accounting which helps managers and employees to put their efforts together in planning, in monitoring, you understand it, and reviewing the effectiveness of all policies they make. How effective are these policies? Are they working fine? Are they not working fine? So this, performance management in ICANN, it is actually a course in skills that all ICANN students that is in skill must study and pass before they can move on. You understand it? And performance management is more of assessment of the activities of the management toward achieving their goal. All right, let's move on. The next one is auditing. Of course, this is a familiar word to us. It is a type of accounting where which is an independent examination of the financial statement of an entity by a professional called an auditor. Now, this professional accountant, after gathering various forms of audit evidence, forms an opinion on the financial statement. This opinion is very key. So whenever you have audited financial report, you will see the auditor's report in it, and it is a form of accounting. All right, the auditor expresses this opinion in a report asserting the fairness of the financial statement and the scope of work carried out before arriving at this opinion. Now, auditors are very key. They express their professional opinion on the financial statement after they have done their work, after they have carried out their work. Okay, so that is auditing, and is a type of accounting. The next one is government accounting. Government, all right, is a part of public sector accounting that records revenue, expenditure of government. All right, they use these informations rather to form decision making, or to form opinion, or to make some planning, and to do control, and to appraise government performance, and to appraise compliances with the laws regulating government finances. All right, that's government accounting. One more time, it is a part of public sector accounting, and for people that are studying that into ICANN, it is one of the courses, that's PISA, public sector accounting and finance. So it is part of the thing you will have to understand, pass, before you can move on. All right, the next one is is taxation. Taxation is a type of accounting. Actually, the accounting profit generated in the financial statement provide the basis for determining the taxable profit of an entity. Now, please, as we go on, if you have any question, please do not hesitate. please quickly type them on the chat box below and we will attend to them immediately. We'll attend to them. I will attend to them now as I'm in this class. So please go ahead and let's have your questions, let's have your observations, let's have the part you do not understand, and we'll shed more light on them. So taxation, it is a form, of course, taxation is a common term that a number of us know. As accountants, we must know that the accounting profit generated in the financial statement provide the basis for determining the taxable profit of an entity. We actually call them the tax base. The tax base of any entity is the volume of profit that it generates. You understand? Within a particular year. You understand? Okay. The taxable profits are different from the accounting profit because certain expenses and income are allowable for accounting purpose but disallowed for tax purpose. Now, when we get to preparation of financial statement proper, which is going to be probably in the next class, I will shed more light on this particular clause. Going forward, a good understanding of the knowledge of these taxable and non-taxable incomes and expenses would help an entity in the tax management. All right. The aspect with which you manage the effectiveness and efficiency of how the company the company's resources are being managed is called financial management. Financial management is therefore the process by which the resources of an organization are efficiently and effectively procured, utilized, and accounted for by the owners of the business in such a way to maximize the wealth of the owner. Financial management, remember, it is about the utilization, the accounting for the owners, so that owners will see that you're putting effort in maximizing their wealth. The next is that part of accounting which refers to the application of accounting skills to investigate and probe frauds, deliberate misrepresentations, falsifications, and misappropriations or embezzlement of an entity's resources with a view to recovering such funds, usually through legal proceeding. This is actually a course in university, forensic accounting, and they use this type of accountants as witnesses in court wherever they observe any form of misappropriation or deliberate misappropriation or falsification of record. All right, I hope this is clear to us. All right, the next one is social and environmental accounting. All right, this type of accounting shows it examines or it weighs or it appraises or it assesses the impact of the environment on the entity's activities. All right, so it means social and environmental accounting is a branch of accounting that deals with accounting for and reporting of the social and environmental impact. Please take note of that, of an entity's activities upon the stakeholders, investors, management, employees, customers, etc. All right, so that is social and environmental accounting. The next one, which is the last but not the least, is bookkeeping. Bookkeeping is the process of recording financial transactions in the accounting records, the books of an entity. It incorporates posting of transactions and extracting a trial balance. All right, so bookkeeping, so to say, ends or starts from the prime entry, that's journal or day books or ledgers, then to trial balance. It ends with trial balance. While financial accounting starts from the preparation of trading profit or loss, which we are going to be discussing in subsequent classes. Please, if you have any question, like I said, please go ahead, let's have your question, and we will quickly attend to them. And as you are enjoying this class, please try and subscribe to it. Let's subscribe, let's share, so that we can have bigger coverage on social media. All right, the financial statement has different uses, like we said in the introduction. So there are different users of this financial information, and for people that want to sit for exam, for example the foundation class or introduction to accounting, you should have very good idea of this, because it usually comes out. So please, let's pay attention to it. All right, the first person that we are going to look at is the investors. The investors in a business, they look at, because they are the one that provide the capital of the business, so they will want to pay attention to the financial returns. They want to pay attention to the performance of the entity. And how will they do that? They assess that through the financial statement, and they look at the equity part of the statement of financial position. They look at the profitability in terms of the profit in the profit or loss account, etc. All right, so that is the part of investors. All right, the lenders also have very deep interest in the financial statement that is being prepared by the accountant. Now, why are we bringing this on? We bring this on so that all preparers of financial statements will know that they are not just preparing it for themselves. It must be prepared following the adequate rules and guidelines that are laid down, to avoid any form of misrepresentation or misinformation in the financial statement. You understand it? All right, lenders such as banks are interested in financial information about businesses that borrow from them. Financial statements can help lenders to assess, like I said, the continuing ability of the borrower to pay interest and its ability to repay the loan principal at the end of the period. All right, I hope this is flowing. The next one is suppliers and other trade creditors. Financial information about an entity is also useful for suppliers. These people are different. They are different from the lenders, because these are suppliers. These are people that supply goods to the entity. You understand it? So they will want to know whether the entity is doing well or has the ability to pay it back, to pay back to repay their fund, so that for continuity. You understand it? All right, let's move on. The next one is government. The government and government agencies are interested. Of course, you know that government is always interested in your financial statement. All right, in the financial statement of business entities, they might use this information for the purpose of business regulation or deciding taxation policies, etc. You understand it? Now, the government regulatory bodies also use it to gather data, so that they will use it for projection and so on and so forth. The next one is the general public. In some cases, members of the general public might have an interest in the financial statement of the company. The International Accounting Standards Board framework comments, for example, entities may make a substantial contribution to the local economy in many ways, including the number of people they employ and their patronage of local suppliers. All right, so the general public also is interested in your financial statement. The next person is the employees. The employees need information about the financial stability and profitability of their employer. This assessment of profitability can help employees to reach a view on the ability of the employer to do what? To pay higher wages in the future. You understand it? All right. So that is that for employees. The next one is the customers. Customers might be interested in the financial statement of an entity, especially if they rely on that entity for the long-term supply of key goods or services. Managers, of course, you know, managers are the preparers of the financial statement. So it's not, I don't, the IASB, International Accounting Standards Board, they did not make provision for them, but because they are the one that prepare it, they look at it, say, however, management is responsible for producing the financial statements and might be interested in the information they contain. All right, and that marks the end of this section. I hope this makes sense to you. I hope it makes sense. Please help subscribe, help share, help click likes, and let us have your observation. This class will continue shortly in the part 2. This is part 1 of Introduction to Financial Accounting. I appreciate you. Thank you so much. I'll see you in my next class. Please subscribe, share, and like our channel. Appreciate you. See you soon.